Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning with this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We'll look at the emerging markets, gold, the dollar, oil, and we're also going to take a look in at some retail speculation on the option side of things. It's a bit concerning here at the moment. As always, if you like this information, please subscribe to our channel so you can see it on a weekly basis. Let's jump right into it. Now, we have been talking about the S&P 500's major resistance zones, and the last one really before our gap and the all-time high came right in about that 32.30. And you can see the beginning of the year, we have all this price action right here at this level. We've got some more here at the beginning of the year. And then when we get our actual breakdown, it happens right there at that level. We have a sharp sell-off. And that sharp sell falls to the other area of important price action, which is right around that 31.30. We'll notice that we rallied right up here into that 32.30 zone, and that is where we were sharply rejected here over the last couple of sessions. The Fed rate decision came out yesterday afternoon, and it has been selling ever since then. Overnight, we gapped down, and the problem is we gapped down underneath this important level. So now we have major resistance that's going to come into play, not only at that 31.30, but now at the 32.30 there as well. So we have some issues to contend with here with the weakness that we're subsequently seeing so far. Our next zone of support comes right in around that 3,000-ish level, and that, of course, played out a number of times from last year as well as earlier this year. So those are the key levels that we're paying attention to there on the S&P 500. This was not a good spot for the bulls to essentially fail. Now, we'll look in at the Nasdaq. The Nasdaq still continues to be an absolute monster, and even with this pullback that we've got here over today, the Nasdaq's down about 1.7%. The S&P 500 is 2.5%. The Dow is almost 3%. Russell's 4%. So we can once again see Nasdaq strength still above that all-time highs that were put in back in February. It's very tough to get super concerned about the overall market with the Nasdaq above this level. If the Nasdaq falls below this level, now we start looking at some areas back down towards that 9,200. You can see the importance of that going back throughout the course of the year. If the market can stay up over this zone, that would be very, very good for all of the market if the Nasdaq can continue that strength. So that's what we're going to be watching there. So not a ton of concern out of the Nasdaq. We got a little bit more concern here out of the Dow. The Dow is back below that key 2,700 level. We talked about all of last year's price action coming right in at that 27 zone. We broke above it and sharp reversal back below it. That is not what you want to see. This looks like a failed breakout. Breakout, can't hold for more than a day or two, and then a sharp reversal back under it. And look, it's back underneath of that gap there as well. So big area of resistance comes into play now between here and 2,700 again. So a lot of work that needs to be done out of the Dow. We take a look in at the Russell, and the Russell has had a very sharp reversal. And where did it do it off of? Right at that 1550 zone. Okay, we talked about this as that in between the two major resistance zones, really 16 and some change, is really, really important from a support and resistance level. We were not able to get back up there. So once again, Russell still being the weakest of all of the indexes, and we are now back below that 1450 zone, which is really important from last year's support. So our next zone of support really comes in at that 1350, and then we're talking all the way back down at that 1250 zone. So really, really important for the Russell to hold up here. Now, we take a look at the emerging markets. We looked at these, and we talked about how we had gotten back up above at 940 zone, and you can see the white line from last week's video. We talked about that key 1,000-ish level. We got up above it, big gap underneath of it. What I'm going to do now is I'm going to throw that 200-day moving average in on the chart for you guys, and you can see that we are now below the 200-day moving average. We poked up above it for a few sessions and fell sharply underneath of it once again. This is not what we want to see from the bulls point of view here. This is really bad action. We're back under key level, and now we're back under that 200-day moving average. So we were only able to hold over it for a couple of sessions. This is not what we wanted to see. Okay, next I want to come in and I want to take a look at oil. We've talked about this a ton. Here's the 200-day moving average up on oil, all the way back up at 45. We have not gotten up to that at all, our major resistance zone was actually that gap at about 41. We had such a strong rally, we pushed up, and where essentially have we stopped moving higher? It's right at that resistance zone. We're back underneath of that 40 zone, and today oil's down 8% approximately. Still holding above that key zone of 34, but that's really, really important that we hold on to this. If we lose this zone right here, we got some support in at 30, and then we kind of don't have a whole lot underneath of that. So you really want to see oil hold that 35 zone. Underneath of that would be a big problem. Now, we haven't checked in with the US dollar in a while, but I think it's really important to take a look at it at the moment. All right, I'm going to look at this now. I'm going to look at it on a weekly time frame. I'm going to get that 200 off of the chart for you guys here. So we just have a clean chart. And we'll actually back this out. We'll look at it on a monthly first. So the US dollar really has been trading essentially inside of this range for the last 5-6 years. We had a false breakdown and a false breakout a couple of times in here. So if you wanted to, you could certainly move it up to here, and you could move the bottom down to there. And that's really how I'm looking at the US dollar here over the last 6 years on a monthly time frame. When we zoom in and we look at this in on a daily time frame, you'll notice we had that big spike and we've had a sharp reversal lower. And on a daily time frame, we're really looking at this as that first kind of zone of support between 96 and 95 on the US dollar index. Underneath of that, things do get a little bit potentially ugly there for the US dollar. Our next main support's in at 91, and then you've got that 88 zone back in here. What happens right here is really, really important. It's important for commodities. It's important for the emerging markets. It's really important to pay attention to what's happening to the US dollar here. When we talk about commodities, of course, the commodity I'm going to pay the most attention to in regards to the US dollar at the moment is going to be gold. We back this out. We look at this on a monthly chart. We still have that beautiful, saucer essentially that was played in here with that breakout earlier this year. It's continued to push higher. We know we still have that major resistance at that 1800 level. We haven't broken back up above that, but the good thing for the gold bulls is every dip essentially has been picked up. We haven't really fallen back under that 1680 zone in 2 months. Every time it comes down to this level, it's getting bought. Now we're just looking for that break over that 1780 zone. And I think what happens in the US dollar here certainly will have an impact on the gold market as well. We don't have to have the US dollar break down for gold to continue to be stronger, but if it were to break down, it would give an additional tailwind to gold, which we'd certainly want to pay attention to. Now let's jump in and take a look at some of the retail speculative behavior that we've had here over the last month, and it's starting to get very, very concerning. We're going to look at a couple of different data points, but first and foremost, I want to take a look at small trader call buying to open in millions of contracts. Look at what has happened here over the last few months. The speculative buying out of the small trader here is not matched at any point in the last 20 years. It's a bit concerning. And the last time we really had a big spike here at the beginning of 2018, look what happened, right? So this is way out of control here in terms of speculative behavior, and I'm going to look at it in a couple of other manners as well. We don't want to just look at it from the retail traders. We want to look at it also from everybody to see if the speculation is across the realm, and it is. All traders, not just the small traders, when we look at every trader in terms of call buying to open, out of control. Nothing like this in the last 20 years. Very, very concerning. If we look at option buying, including hedging here, so we take small traders calls minus the puts buying to open. So taking a look at the hedging activity as well, still very, 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 very frothy in terms of speculative behavior at the moment. Here is why it's so concerning for me. When we look at rampant speculation, when everybody is essentially loaded on one side of the ship, the boat can essentially tip over. And when we look at small trader call buying activity historically, look at where that speculation really starts to take off, right? .com bubble, There was a little bit here still on the upside of 2006, 2007, but then we have 2008. We have that ridiculous amount of call buying. And then we had it earlier this year before the sell-off, and now we've got it once again. When you look at the numbers, the win rate 1 year later with this type of rampant speculative call buying, the average return there is negative 15% with a win rate of only 15%. That is very concerning when we're looking at this data. The last thing I want to take a look at is the Nasdaq McClellan Summation Index. Now, with today's downturn, this is actually going to start to really roll over, but you can start to see that curve happen here over the last session or two. We're starting to potentially get a crossover. We haven't gotten it yet, but after today's selling here, we may actually get it. This is a real concern because it's also happening right up into this resistance zone from the beginning of 2019 in terms of our breadth reading. So we're going to pay very, very close attention to what happens here. Overall, the market's run into some major resistance points. The Nasdaq continues to trade above an important level. The rest of the indexes have failed right at a key spot. The amount of retail speculative behavior that's going on right here suggests a lot of froth in this market and is a bit concerning. And when we looked at the Nasdaq McClellan Summation Index, it looks like it might actually be turning over. What I wanted to leave you guys with was this, right? When we take a look at all these historical data points in these videos, we're looking at a different world. The central bank intervention that has essentially happened this year may make all of those previous data points a little bit moot, so to speak. And what I mean by that is, since we have all this extra free money in the market, in the global economy, even though economic behavior might not actually be great based on everything that's going on, the money still is out there and is seeking yield and is seeking a return, and subsequently it is going into the stock market. So when we take a look at all those previous data points, maybe the rampant speculation that we have here in option trading is just all of that excess capital is put into the market, and it may not matter as much as it used to in the past. That is the bullish case, is that we have so much additional free money into the market that we are just going to continue to head higher. The historical data points of froth and over speculation don't really matter anymore. There's always that saying, this time is different, and it never really is. That certainly could be the case here as well. We are at a point where we are running into resistances. Speculation is high. Historically, that has been met with some downturns in the overall market. Regardless of all the central bank intervention, human nature still may continue to play out, and we may get that downturn. We're going to continue to watch all of these things and continue to discuss them in our videos, but that is really the big arching overview topic that we need to continue to pay attention to moving forward, is how much that central bank intervention that we've got here this year really changes the historical data points, and maybe our average valuations have now will be much higher than they were historically because of all of the free money. We're not really going to have an answer to those questions today. We're not going to have them next week. We will get them over the next few years. We're going to continue to pay attention to sentiment, continue to pay attention to the technicals, and we're going to continue to analyze and take a look at the market like that. But as time goes on, we may ultimately have to change our major outlooks based on historical data points. Now, as always, if you guys want to talk shop with me, please reach out. Tedeschi, perspectivewealthplanning.com, or pick up the phone and give me a call, 814-580-9881. Would love to talk to you guys. As always, I'll see you all next week.